YouTube, my name is Andrew and I hope you're having a wonderful day. I am sure you've heard about the craziness that's happened in the stock market this week, revolving around GameStop, AMC, and other stocks. And it's kind of like the entire stock market kind of broke down a little bit, and I want to dive deeper into what actually happened. Before we continue though, I want to let you know that I am not a financial advisor, and this is for entertainment purposes only and should not be construed as investment advice. Let's get into it. Before we dive deep into what actually happened around GameStop, please hit that like button because it really helps me grow my channel and I will greatly appreciate it. Thank you. So, what revolves around GameStop this week is kind of insane. It's a once in a lifetime event. The thing that with GameStop is GameStop, technically the business model has been dying over the past couple of years due to technology advancements in games, where the model is trending towards more downloadable games versus physical hard copies of those games. GameStop actually gave reported losses over the past couple quarters. So the people made bets against GameStop thinking that it would go into bankruptcy. These bets were in forms of short sells. Now, what does a short sell mean? Short selling is when you take a stock and that you don't own and actually sell it and get money for it. So what is this like? Let's take this example. Person A has 100 shares of GME. Broker A can allow that person A is using broker A, and broker A can allow person B to borrow those shares with a price tag of some interest that they're going to charge person B. Person B then sells those shares on the open market and somebody buys those. So let's say person C buys those and uses broker B for this example. So person B is hoping that the price falls to a point where they make a profit. So person B is planning on then buying back those shares at that point in time to return to broker A to fill their contractual agreement on the short selling, and hopes the profit, the difference between that buy and the interest in what they sold at originally. So in the GameStop instance, over 150% of the shares were shorted. How is that even possible? Well, remember when I said person C uses broker B? They bought those shares. They now retain 100 shares of stock. Broker B can now let person D borrow those shares, sell them on the market just like person B, and person D is trying to basically do the same thing, retain the premium that they got for selling the stock, and then buy back at a lower price, paying back broker B the interest fees and hopefully taking a profit at that point in time. This cycle can continue as many times as it wants, effectively reaching a limit of over 100% of the shares shorted. And theoretically, it's unlimited. Theoretically. Reality is probably not going to allow that. So what stopped GameStop from going to zero? Well, this is where it gets juicy. People on Reddit using a form called Wall Street Bets. So Reddit allows people to have sub-forms on their form. And this one was called Wall Street Bets. Some people did some massive detailed analyzing of GameStop and realized that the shares were extremely undervalued and predicted that if any good news came out about the company, the stock price would drastically go up. And this good news came in the form of Ryan Cohen joining the board and also investing millions of his own dollars into the company. Now, Ryan Cohen is known for being the CEO and founder of Chewy.com, so he knows some great things about the online marketplace, beating out companies like Amazon and eBay that were established. He was able to get onto the board and start showing that online sales could be a possibility. With all this combined, the stock shares started to go up, which started to force a short squeeze. So what is a short squeeze? So referring back to the earlier example, when I said person B and D were borrowing shares from brokers A and B respectively, they have to close their position somehow. And the only way to do that is to buy back at whatever current price is available for them to buy back at. Buying those shares back ultimately creates a lower supply of shares in the market and increased demand. So the price continues to go up and causing more short sellers to close their positions, forcing them to buy back at whatever the current market price is, driving the price even higher, causing a huge increase in demand and a very short supply of stocks to buy. So if that's the case, why couldn't we just continue buying more shares, driving the price even higher? Why did Robinhood and these other brokers step in and stop allowing their users from buying the stock? Well, the case that has happened, there's a couple theories out there. There's the more sinister one where Robinhood and Citadel Securities were in this cahoots of stopping their traders from allowing to buy because they were stealing from these massive hedge funds. That Citadel Securities just put $2.7 billion in on Wednesday due to the losses that they had on GameStop. But it's probably a little bit deeper than that. The thing that happens with the market, so when we execute trades on apps like Robinhood and Webull, they seem to happen almost instantaneous. So they make it look like the stock is in my account within seconds of me submitting my buy order. That's not the case. What is actually happening is I'm telling my broker, hey, I want to buy these shares. So the broker actually goes out, fronts my money for me, and tells another broker or somebody else in the market that I'm willing to buy. And it takes, once they find that person, it actually takes 2 days past the day of trade to settle the transaction. So let's roll that back a little bit and go into a deeper explanation of what's actually going on in trade settlements. So because of this 2-day trade rule that is by the SEC, we have to wait a day, the day that we trade, plus 2 more business days. So if we traded on Tuesday, our transaction won't actually be done until Thursday night. And so the way this works, let's look at our example. So let's say we have broker A and broker B that have executed a trade with a buyer and seller. Both of these brokers are actually going up there and saying and vouching for each of their sides of the trade that, hey, we can make this trade happen. I'll give you a percentage of the capital up front to wait until the trade settlement date. Well, the DTCC is an organization that is basically a broker of the brokers that said that GameStop purchases were too risky for brokers to only bring a small percentage of the trade to up front. The requirement was increased to 100% of the time, 100% of the capital up front. That requirement made it so that Robinhood did not have enough capital to fund the sheer amount of trades that they were trying to process for GameStop, causing GameStop and other securities to stop being allowed to trade, because Robinhood and these other apps didn't have the sheer capital to bring to the table. Ultimately, seeing what we saw on Thursday, where we couldn't execute a buy order for GameStop, Nokia, AMC, and other shares, like other companies like it, causing a massive decrease in value on GameStop, because it allowed the more institutional investors a hand in the market because they weren't limited. And so the reason why we could only sell is because stocks never really leave the DTC and these clearing houses, because everything is just a big ledger in a database somewhere. There is really no requirement capital up front on the sell side. That's why the sells were still allowed to go through on Thursday. What is going to happen in the future and going to stem from all this? So in the short term, what can we expect? We can expect that the stock market will continue to be very, very volatile in the coming weeks due to this short squeeze and it working itself out at the free hand of the market. We can also see that there's going to be investigations by the SEC into Robinhood at a minimum. There's going to be class action lawsuits against Robinhood at a minimum and other sites, as well as other investigations around what is going on. In the long term, I can see some restrictions on how much short selling can actually be done to a particular stock. There's definitely going to be some restrictions and regulations around this. And then I could also see some technology advancements in this space as well. And there's actually a company right now that is working on settling trades within the same business day that the trade happens using blockchain technology. So Bitcoin and Ethereum as a backbone to them being able to settle these trades almost within the same day. I plan on doing a deeper video of how that might affect things and how I plan on investing based off that information in a later video. So please, if you're interested in that, hit the subscribe button and turn the bell notification on so you can see that video when it's released. With all that being said, it's a pretty awesome experience to be a part of something that's going to change investing in the stock market forever. If you would like to be part of the fun, I'm going to include my referral links to Robinhood and Webull in the description below. Also, hit that subscribe button and hit the like button and share your thoughts with me down in the comment section below on GameStop and what happened in the stock market as well. See you next time.